Hello, everybody. Welcome to the Gold Market Mastery webinar or live stream. I'm going to give it a couple of minutes to give people opportunity to jump in. If you can comment, let me know where you're viewing from today. That'll be brilliant. I think comments are limited to Facebook and YouTube at the moment, so hopefully you can all hear me as well. Let me know if you can. Hi, Pops, all good? Hi, Cody. If you look at the banner at the bottom, you'll be able to have a little look at the competition. I'll try and read it out as it goes past for you. So as part of the Gold Market Mastery event, we're giving away an ounce of gold. Terms and conditions apply to 5 lucky clients. So you'll gain an entry if you trade during the campaign period, obviously through Blueberry Markets, from the 24th of April to the 26th of May, and you get a bonus entry if you attend the live stream. There's another live stream this evening at 7 p.m. We're also doing another event on the 17th of May, which is going to be another gold event. So you'll be able to have another opportunity to come visit then. Announcement will be made on the 31st of May, and it will be announced via Facebook, Instagram, Twitter, and our Telegram account. So that is how you can enter. Thanks, Charles. Right, I'll get going in a moment. Just going to give people opportunity to jump in. Let me know where you're from as well. That'd be great. If you could leave the stream a like as well, and if you're on YouTube, please subscribe. It really helps us immensely. And thank you for taking your time to come and join me today. We're going to talk about gold. I did a webinar already this morning at 9 a.m. So if you were in that webinar, I'm probably going to rehash a lot of the stuff in this webinar as well. They gave the people that viewed it this morning gave me some real good questions to actually go over. So some of the questions were relating to what Forex pairs correlate with gold, and things like that, and what we could expect from potentially the Federal Reserve and things like that. So there's some really good questions in that. So I'm probably going to cover a load of those questions, but if you do have any questions yourself that you want to ask, then please feel free to drop in the comments section, and I'll happily cover that. I'll make a note of it and see if I can cover it towards the end. So basically, we're going to go over sort of a few sort of fundamental things as well as technical things in this webinar. We talked a lot about price being in this overall range this morning. So we're going to see, will price continue within this range, or are we expecting a little bit of a breakout? And like I said, we compared it to the dollar index. But what I'm going to talk about first is what's really been driving those gold prices to move higher recently. And it's a lot to do with the Federal Reserve hiking interest rates. It's a lot to do with other fundamentals that have happened in the market, including the sort of European and US banking crisis that we've seen most recently, with obviously the Silicon Valley Bank collapse that saw prices of gold move higher, and ultimately the fears of kind of global recession could be a part to play in why the price of gold has moved higher. So we're going to have a look at these sort of technicals, but if you do have any technical questions, I'd love to know kind of your experience in trading as well, what kind of level you are, whether you're a beginner or whether you've been in it for a while. Let me know as well. So we're going to talk a little bit about this range that's been developed here. Now, price has been in this range pretty much since we entered it in 2020. So it's been a real big range here that's developed in gold between the highs of the $2,075 level and the lows between sort of the 1630s and the 1680. Hi, Vincent, again, welcome back. So we'll give it so basically within that range, we're looking to see if price will continue within that range or trade outside of the range. And the possibility for gold prices to continue higher will be down to the Federal Reserve. The reason why I say that is because the dollar and the price of gold are highly correlated. Now, I couldn't bring this chart up this morning, but I've got it up this afternoon. So this is the dollar index and the price of gold, and you can see that we have strong correlations between the two. So this is about a year or just under a year, and we can see most recently that the price of gold has moved to the upside in line with that move down in the US dollar. We can see here where the US dollar peaked at some lows and started to rally to the upside, which is around that 101 level that we spoke about this morning. We saw the price of gold continue lower at that point. Price topped around the 105s and price moved lower. That created that gold price. So we know that at the moment the correlation between the price of gold and the US dollar is really strong. Okay, so we know that what we need to be focusing on is what's happening in the US markets. Okay, now there are times where that correlation isn't strong, but most recently you probably have to look a little bit further back to see that, and that can be down to sort of outlier events. Okay, so things like the Russian invasion of Ukraine, things like elections, stuff like that. You can often see maybe some outlier correlations. So I like the correlation at the moment, and that's why we're looking at seeing if gold is potentially going to top out at these range highs here. And I'm going to quickly flick over to the US dollar index. I looked at this morning. I wanted to just show again that price is at this 101 level, a real key level on the US dollar index. Now, yesterday, fundamentally, we had the Federal Reserve federal funds rate announcement, and they moved interest rates up to 5.25% now, but hinted at a future pause to cut. Now, inflation in the US has actually come down, so that's quite good news. However, it's not anywhere near still their 2% targets. And Federal Reserve Chairman Powell yesterday was very specific in saying that, they really want to bring that inflation rate down and will use sort of any means to do so. So there's still potential there for the Federal Reserve to continue to hike interest rates. And obviously, we've seen how that has affected the dollar most recently by the dollar weakening. Okay, so I've been looking at the dollar index chart, and what we talked about this morning was this 101 level. Excuse me. Now, the 101 was support back in January, or let me change the color of that so you can see that. Support back in January, price bounce. We had quite a significant bounce into the 105 spot 75. Ever since then, prices continued to move to the downside. And what I spoke about this morning was the fact that we're back at this 101 level. Okay, now the 101 is significant. We can see that it was significant in the past. But most recently, when we've come back into those levels, price has only had a short-term bounce, only a short-term recovery. What that tells me is that the buyers at this level aren't very aggressive. Okay, you can clearly see that when it came into it last time, look how aggressive the buying got when we got into the 101 previously. Now, if I just actually zoom out, I'll show you why they got aggressive there from a technical perspective. So if I actually just highlight this, I'm going to write that to the left. Okay, I'm just going to take these off. I'm just going to scroll back. So you can see around about that 101 level, it's actually 101.25 at the time. There was a decent low just formed through there. If I go to the weekly time frame as well, you can see it was in and around that 101.25, that 101 zone. So if I was to draw a zone around that sort of area and look left, you can see that it's acted as support in the past. We've had resistance there in the past as well. So really big level for price on the US dollar index chart. So that's why it's important to me, because I feel that if price was to trade through this level and we say, look, we've had a bit of a short-term bullish move, but if price was to trade through the 101, what will happen to the price of gold? Okay, what do you guys think will happen to the price of gold? Let me know in the chat. I want to make this one a little bit more interactive. After looking at the correlations, what do we expect? Shoot up. Okay, Lucas, thank you. Thank you, Cindy. Hi there. HRX, how you doing? Yeah, gold will go up, right? We're looking to see if that correlation stands. Dollar index breaks through the 101 level. Where do we expect gold to go? We expect gold to trade even higher. We expect it to potentially break through the 2075 barrier, okay? And if price trades through the 2075 barrier, there's not a lot in the way to look at for key areas of support and resistance. This morning we spoke about looking at your whole numbers. So look at your $2,100 level. You can even look at the quarter numbers, so 2125 and then go up to 2150s and things like that. So gold really will break through to the upside. So I think we've got to really consider what's going on in the US from a fundamental standpoint in order to judge what could potentially happen with gold. Now, there are other things that you can look at, and a little bit later I'm actually going to try and show you some commitment of trader reports. I just need to find some decent ones that can use, and we'll see how the commitment of traders are looking at that, because that'll be really interesting data to have a little look at a little bit later on. But for now, we can use the dollar index, and the dollar index moving back to the downside suggests that this could move higher. Now, somebody asked me this morning, why wouldn't you just short from 2075, the extreme? And yeah, you can absolutely do that. You know, if that's part of your trading plan and your trading strategy, that is something you can look at. But the majority of retail traders, I would say, are ones that are looking for longer term moves, because they can't keep an eye on the charts 24/7. Okay, so you want to be looking for those longer term moves, those safer moves in the market. Now, just trading from highs and lows is a good place to start, but if you can add in a little bit more of a fundamental reason to why a price can do a certain thing, then you're going to be a lot more successful, because you know what's driving that particular market. In this case, we know that the US dollar fundamentals are driving this market. The what we saw with the banking collapse in the US was driving the market at that time. You then had the Credit Suisse situation. So we know that when these kind of risk events happen, the price of gold will likely continue to the upside. And the market is very tentative at the moment. I feel like it is in this sort of risk place where we could still see some kind of reaction to some heavy news. But what I'll be looking for from a technical point of view is looking at the potential patterns that form around particular areas. So like I said, you could look at shorting with limit orders and things like that, because we're at range highs. But if the dollar is going to continue to weaken, why would I take that risk? Why would I take the risk of shorting there if price is going to come all the way back up, break through this level, and then hold above that level? If anything, what we want to do is, like we've been going on about all morning, what happens to the dollar index here? If the dollar index dips below 101, but then forms a common pattern where we get sort of a double bottom pattern, we could even look for something like an inverse head and shoulders pattern, common patterns that you probably have heard of in the past. Those all show you signs that the market is potentially going to change its pattern or its trend, okay? And that's why I particularly look for these patterns at key turning points, because they're well known to show a potential change of that trend. So what we may see, if gold is going to hold the range and the dollar is going to start to turn, I don't think it will, but if it does, we could maybe see a sweep of the 101 or even the 100 spot 75, which is the level underneath, which are these lows in here. If price breaks higher, that is the only way I would be interested in seeing gold hold that range, okay? If price breaks through and down and we reject on the other side here on the dollar index, I'm going to be really interested in seeing how far this gold position could potentially go, okay? Because I do feel that we will see even further upside to the price of gold. I mean, from a daily point of view, this is looking pretty good in terms of if you're a seller and you sold at the 2075, you know, looking at the daily, you're thinking, yeah, great, we've rejected previous structure highs here around about the 2050 area. We look to be closing below that. Obviously, the market's still open for a good few hours yet. But what really needs to be done here is we need that sort of catalyst that's going to drive price lower. And I don't really see it being there for the price of gold at the moment. I think the dollar weakening is going to continue, and that's going to push prices a little bit higher. Now, saying that, as a trader, I would like to see prices come lower, okay? Because we want to have those kind of optimal entries, right? We don't want to be buying at key highs, okay? Because the reward to risk ratio is not good. It's a riskier trade, okay? I want to see price. That's why I said I want to see price on the dollar index trade through the 101s first, because it tells me that the sellers are in control. And if the sellers are in control on the dollar side of things, then I'm going to look for that breakout on gold. Gold will go up at what price, Jack? That's a good question, HRX. Obviously, I would love to know what price it will go up at. I wish I could tell you. The only thing we can look at is the only thing that charts give us is a history of what's happened, okay? Now, I like to focus on what's kind of happened in the most recent history, because that tells me where institutions have got involved. So what I mean by that is, if we were to zoom in on this daily chart, it's very evident and very clear as to where business has been done. And what I mean by that is if you highlight all the lows of these candlesticks in here, what could we probably say about those lows? Well, in my opinion, is that buyers have stepped in, okay? Every time we've come into this area here, buying has stepped in, okay? To the point of price has broken higher, okay? So where buyers and sellers, the imbalance has become that the buyers are more in control of the market, sellers have given up at that point, and price has traded to the upside. So we know that in and around this low here, buyers have been active. So if I was going to be long personally in this market, that's where I would be looking to see if buyers remained, okay? So if price came all the way back down into here, let's say on the dollar index, the 101 held, price moved up into the 102s, that would be gold being around about this 1975 handle, okay? So if it did that and price came back down to here, I know physically I can see from the chart that buyers have been active around that area. So all we need to do then is wait to see if buyers are active again at that point. If they're not, price will travel through and will break through the 1950 and price will trade lower, okay? Because they don't see that as fair value anymore, right? If price does come back into this point, and let's say we get a long wick rejection, people are probably very familiar with the sort of long wick candlesticks. Let me know if you are. Sort of like a low, you can call it a sort of a low test candle, a hammer candle, anything like that. Anything with a long wick would suggest that there has been a transition between buyers and sellers at that point, okay? So if I was to get something like that, I would say to myself, well, that is a rejection again around an area where buyers have been present in the past. So what's the likelihood of price to do at that point? Price is likely to potentially move back up into those previous highs again. That's the only way I'd look at it from a sort of trading perspective, because the only other alternative we have is, like I said before, is for price to trade through resistance, come back to the other side of it. But even then, we need evidence to say price is going to move back to the upside again. Okay, does that make sense, guys? Let me know in the chat box. I'm just going to continue to drink my tea before it goes cold. Perfect. Brilliant. Does anybody have any questions that I haven't talked about already? Vincent gave me a really good question in this morning's webinar, and it was what Forex pairs are correlated with the price of gold. So I managed to put up a quick chart for him so you could see it. But the one currency pair I would say was Aussie US dollar. Okay, and you can see here we've got the Aussie US dollar with the price of gold. So the Aussie US dollar is the blue line, and the price of gold is the green line. And you can see quite easily the correlation between the currency pairs. Again, both affected by the US dollar, so there's the sort of connection there. But you can see how closely sometimes the price of gold and the Aussie US dollar can be connected, especially if we look at sort of October last year into the end of March, or the start of March, I should say. And you can see how correlated those pairs have been. Correlation has gone a little bit now. We can see that Aussie US dollar has been very flat again. Why is that? Fundamental reasons going on in Australia have kept the Australian dollar a little bit weak. And then you've got the fact that the dollar's weak as well. So we had a bit of a sort of battle there of a weak strength and weakness. You know, if you watch the or you subscribe to the Blueberry Markets YouTube channel and watch the week ahead analysis video, you know, I quite often show a currency strength meter. So I'm very big on currencies that are strong and weak in my trading. And so that's what can cause that sort of type of movement, is both currencies being weak. However, look how sharply the price of gold moved there. And again, that's probably down to some more fundamental factors, as well as the dollar being weak. Okay, so that was a great question from this morning. Does anybody have any other questions? I'm going to talk a little bit later this evening. I'm going to actually make a note here. If you can join me around 7 p.m, I'm going to try and find some commitment of trader reports, just because they're really cool to show off. I'm also going to talk about the gold to silver chart ratio. I got asked that question in this morning's webinar. I haven't been able to source the chart for that yet, so I wanted to show it visually. But we will talk about the fact that sometimes silver can be undervalued against the price of gold, and that can often lead silver to be in a better investment than gold. But that is just my opinion anyway. So we'll see if I can pull that chart together a little bit later. But do remember as well, guys, please leave this a like, this stream a like, subscribe to the YouTube channel if you are over on YouTube, and follow us if you're following along on any other social media page. Remember, you can have a chance to win an ounce of gold. Okay, if you're looking at the stream, you can look at the banner. It will give you all the details there. I think the details as well will be on one of the links in the recent adverts. Where do I get that strength meter from? That's something that I've developed. I learned it from somewhere. I then developed it a little bit myself, and then I use it to update me mainly on a weekly basis. Every sort of Sunday evening, I'll go through and I'll mark out where the sort of strength and weakness comes from. There is actually a video on it on the Blueberry Markets YouTube channel, so you can search for that as well. I'll be back on this evening at 7 p.m. but before I go, I do want to make sure that I've answered all your questions. So if anybody else has a question, please let me know. I really appreciate you taking your time out to come and look at this webinar as well. We're going to be hosting some more live stuff in the future. We're going to do NFP tomorrow as well. So if you're around for NFP tomorrow, that's going to be a good one, because again, this will affect the price of gold. Let's actually just bring in, I just want to see what the NFP is up to. Let's go to, I know that they are predicting or forecasting that we're going to see a drop in the jobs numbers. Let's have a quick look here. It's up today, tomorrow. Yeah, so the average hourly earnings is expected to stay the same at 0.3%. Non-farm employment change is expected to fall to 180 from 236, and the unemployment rate is expected to rise to 3.6%. I did see the unemployment claims though; they came in a little bit higher, didn't they? Or we've got more unemployment claims coming out today, and their forecast to come in a little bit higher. So we might not see that unemployment rate climb there. So it's going to be an interesting day tomorrow. So if you can join me for the NFP stream, what time would that be? Around about 1:30 p.m. I might jump on a little bit before that. We start at about 20 past 1 maybe. We can talk about what could potentially happen beforehand and then what could happen after that. But remember as well, guys, like I said, live stream this evening as well at 7 p.m. Thank you, Charles. Thanks for joining me today. The expectation. So if you go onto a economic calendar, Forex economic calendar, they can often give you forecasts as well. A lot of those forecasts are basically from banks as well. So the forecast basically can come from a sort of poll of questions that they send out to all these financial institutions and things like that, and they'll come back and give some kind of forecast. So that's why it's only a forecast, because you know, a lot of the times it can be wrong. So you do have to be careful with those. But it's kind of like last month, you know, they saw the jobs numbers rise, didn't they, to 236. I think they were expecting a little bit of a 180 number, I believe, last month as well, but that didn't quite come through. So yeah, we'll see how that affects the price of gold. We do have some data coming up after this webinar as well, a little bit later on at 1:30 p.m. So we'll see how that has also affected the price of gold a little bit later at 7 p.m. So any more questions, guys? We all good? I know there's a little bit of a delay in the stream, so I might say something and then pause for a second, just have some waiting to see if it will flow through. Vincent, is the live stream going to be on gold alone? Yes, but I'm going to try and switch it up a little bit, try and show you some commitment of trade report data. I know you want to see that kind of stuff as well. So it will be recorded anyway, so it will be shown as well. So if you don't have the chance to join me live, you can join me. You can watch the video after. I'll upload it onto our YouTube channel at some point. But yeah, I'm going to try and change it up this evening. We'll obviously cover a similar thing again for those people that couldn't join in the first two webinars, just to cover that live again. But also we'll kind of go over and add a little bit more to it with the criminal traders. We might even do a bit of seasonality as well, see how the seasonal's playing gold coming up as well. Yeah, and I'll try and get a chart for the gold silver ratio so I can explain to you how the gold silver ratio works. Okay, cool. I think I'll leave it there. I hope you all have a great rest of your trading day. Remember, keep an eye on that dollar index, keep an eye on those US dollar fundamentals. They're going to be crucial to where the price of gold goes to next. So I'm going to leave it there. Thanks for joining me, guys. Thank you really for taking your time to join me. If you do have a quick second and you are watching through YouTube, please hit that subscribe button. It really helps the channel, and you know, it can help us kind of provide better content to you in the future. So thank you, and I will see you later this evening at 7 p.m. Cheers, guys.